Good morning students, a very warm welcome to your economics class. Students, in our last class we have completed the chapter determination of income and employment. We have even done our recapitulation of all the concepts related to excess demand and deficient demand in our last class. So, as already told, today we are about to continue with the remaining portion of the chapter National Income and Related Aggregates. So, students, the learning objectives of our today's class is to enable ourselves to recall the circular flow of income model in a two-sector economy. Well, students, today we are going to begin our class with the recapitulation of the concept of circular flow of income, which we did last before the lockdown. So today's class shall enable us to brush up the concept of circular flow of income, and we will be able to recall the concept and all the contents that were included in this concept. Also students, today's class shall enable us to gain the knowledge of some very basic concepts, and those concepts will help us in the computation of national income. So students, without further delay, let us begin our today's class. Students, the last topic that we did before the lockdown, if you remember, was circular flow of income in a two-sector economy. But I guess most of you all have forgotten this because it's been quite a long time. So before starting our today's class, let us do a revision of this concept once again. So students, circular flow of income is based on certain assumptions. So the assumptions are as follows. The first assumption says that there is only two sectors in an economy. That means the economy has been assumed to be a very simple economy which consists of only two sectors. One is the household sector and the other one is the producer sector or the firms. The second assumption is no government. There is no government interference in this economy. What happens? The economy is simply run by the activities which are conducted by the household sector and the producer sector. No taxes are there, no government interference, nothing related to government is there in this economy. The next assumption is no external trade. It means that in this economy, the people do not buy things from other countries. Also, they do not sell their goods to other countries. There is total absence of import and export. And the last assumption is there is no savings. The people in this economy do not save. Whatever income they earn, they will simply spend it. There is no savings, zero savings. And savings is considered as a leakage which leads to the outflow of income from this circle. So students, these are the assumptions on which this circular flow of income model is based. So students, the first assumption says that there are only two sectors in this economy, the household sector and the producer sector. So this is the household sector and this is the producer sector or the farms. Now, we all know that in an economy there are four factors of production, right? The four factors of production are land, labor, capital and enterprise. And in order to produce goods and services, the firms or the producers require the service of these factors of production. So what will happen in this economy also? The firm, that is the producer sector, will have to hire the factor services to produce the various goods and services. But now the question is, from where will they hire these goods and services? They will hire these goods and services from the household sector. So this means that this household sector will provide the factor services to the farms. This household sector will provide the land, the labor, the capital and the enterprise required for production to the farms. So this is the first form of flow, first flow that has taken place. This flow is measured in terms of the factor services which are provided by the household sector to the producer sector. Now what will happen? With the help of these factor services, the producers or the firms will produce the output. Output will be generated in the economy, and after the generation of output, the firm will have to pay money to the factors for their services, right? So what will happen? Land will be given the rent, labor will be given wages, then capital will be given interest, and enterprise will take the profit. So in this way, the various factor payments will take place after the generation of output. So the firm will then pay to the household for rendering their factor services. So this is known as factor payment or factor income. Now what will happen? The household sector has got their money, they have got their earnings. Now with this money they will buy goods and services. As it is already assumed that there is no saving, so no question of saving arises. Whatever income they will get, they will simply spend it. So they will spend the income in buying the goods and services which are produced by the firms, because we all know that it is just a two-sector economy where only the firms are there and the households are there. There is no other sector. So what will happen? With the money that the household sector has obtained for their factor services, they will use the money to buy the goods and services again from the firms. So expenditure by the household will take place. The household will pay money to the firms, and the firms in return will provide them the goods and services. So what will happen? This is a circular flow which will go on and on. So at first the firms will hire the factor services from the household, and in return the household will be given factor income for their services. Once they get the income, they will make expenditure to buy various goods and services from the firm, and the same money will be and the firm in return will give them the goods and services. Then again the firm will hire their service, again they will be given factor payment or factor income. Then again the household will make expenditure by using the money, and the firm will again in return give them the goods and services. So this is the circle in which income keeps on flowing in the economy. So this entire circular flow of income is divided into three phases. Generation phase. So students, what is generation phase? Generation phase is the phase in which the output is generated by using the factor services which are provided by the household. So generation phase means production of output by the producer sector by using the factor services rendered by the household sector. The second phase is the distribution phase. After the generation of output, the firms or the producer sector will have to make the payments to the factors for their services. So the income will be distributed to the various factors in the form of rent, wages, profit and interest. So this is this will come under distribution phase. The third phase is the disposition phase. After the factors or the household sector get their income, they will spend the money to buy various goods and services from this producer sector or from the firm. So this is known as the disposition phase. So generation phase means production of output by the farming sector or by the producer sector. Distribution phase means the distribution or the release of factor income to the household sector for rendering their factor services, and it will be done by whom? It will be done by the firms or the producer sector. And third is the disposition phase. When they get the money, the household sector will simply spend the money to buy goods and services from the firm or the producer's sector. So students, in this circular flow, we can observe two types of flow. One is the real flow and the other one is the money flow. Two types of flows have taken place if you observe it carefully. One flow refers to the flow of goods and services. Suppose the household sector has provided factor services to the firms and the firms have provided them goods and services in return. So these flow, which includes the flow of goods and services and which is not related to money, is known as real flow. So real flow means the flow of goods and services from the farm sector to the household sector and from the household sector to the farming sector. So flow of goods and services from one sector to another is known as real flow, and this real flow is indicated by B and D. Okay, so B indicates the factor services rendered by the household to the producer sector, and D indicates the goods and services which are provided by the farming sector to the households after the households have made the necessary expenditure. So this is the real flow. Money flow. Money flow means the flow which takes place in terms of money. So A and C indicates money flow. You can see the farms or the producer sector has given factor income or factor payment to the household sector for rendering their services. They have been given their income, they have been given their wages. So this is the flow of money that has taken place from the producer sector to the household sector. And C, the household sector in turn will spend the money to buy goods and services from the farms. So they will again pay the money to the farms to buy the goods and services. So again, flow of money has taken place from the household to the producer sector or to the farms. So real flow meaning flow of goods and services, and money flow meaning flow of money, and the flow takes place from one sector to another. Okay students, so this is all about real flow and money flow. And students, here you can see two types of markets are seen. One is the factor market and another one is the goods and service market. Factors market means where the buying and selling of factors takes place. So what happened? The households have given their services as factors, and in return the factor payments are made by the farms to the household. So this is about the factor market. It shows the working of the factor market. Factors are hired for production and in return they are paid for their service. And this C and D indicates goods and service market. The household sector buys goods and services from the farms, and the farm in return sell their goods and services to the household. This is the working of the goods and service market, and this is the working of the factor market. So A and B indicates factor market and C and D indicates goods and service market. And students, one very interesting thing, this circular flow of income helps us to compute our national income from various perspectives. We all know the national income is the total amount of income or total value which is produced in an economy during a given year, right? So we can calculate it from different perspectives. Here we can see that all the output is produced, and the same output, the factors are paid their income, the wages or the rents, the profit or suppose the interest equivalent to the output which is produced, which means that the output produced is equal to the income which is accrued by the factors, which in turn is equal to the expenditure which is made by the factors, because whatever income they earn, they will spend all of them. Nothing will be saved. So the output generated is equal to the income accrued by the factors, which in turn is equal to the expenditure made by the factors. So these are the three perspectives from which we can calculate or compute our national income. So the three methods which gives us our national income are income method. Income method means the total income which is earned by the factors of production for rendering their services. So it is indicated by A. Okay. Second one is the expenditure method. After getting the money or income, the factors will use that money, will spend that money to buy goods and services from the farms. So this is indicated by C, expenditure method. And the third method is the total output which is generated in the economy, the goods and services which the farm will sell to the household. The total amount of goods and services that is generated in the economy, which is indicated by D. So we have got three measures or three methods to calculate national income. One is the income method, the other one is the expenditure method, and the third one is the product or value added method. So students, this is a recapitulation to the circular flow of income. Next, I am going to give you some very basic concepts. We will discuss some very basic concepts which are very essential in order to compute the value of the national income. Students, before discussing about the various methods to compute national income, it is very important for us to have the knowledge about some very basic concepts which are very helpful in order to compute the national income by using the three methods, that is the product or the value added method, the income method, and the expenditure method. So students, depreciation, this very concept have already been discussed while we were doing classes in school before the lockdown. So depreciation simply means with the passage of time, the machines that we use, basically the fixed assets, they undergo a fall in their value owing to various reasons. Sometimes what happens with the change of time, the technology that we are using, it becomes obsolete. Then also depreciation might take place. The machines might get damaged, or they might need some kind of repairment, so that also leads to a fall in its value. And generally, with its continuous use, a machine in general also undergoes a change in its value, a fall in its value. So depreciation basically means a fall in the value of the fixed assets over a period of time. The second important concept is indirect taxes. So indirect taxes basically means the taxes which the government imposes on the sale and on the production of various kinds of goods and services. For example, sales tax, excise duty, custom duty, etc. etc. Subsidies. Well, student, subsidy is a kind of a financial help or a financial assistance which is given by the government, sometimes to the household sector and sometimes even to some production units. And one of the best example of subsidy is the sale of LPG cylinders to the people belonging to the BPL families. We all know that the BPL families, they are able to get their LPG cylinders at a subsidized rate. What happens? If the market cost of LPG cylinder is rupees 900, they will pay rupees 900 at the time of buying the cylinder, but after some days the government will return them some, let's say 300 or 350 or 400 rupees in their bank account. So that means at the time of paying, they are paying the market price, but they are getting some amount of money in return from the government. So actually they are paying, let's say 600 or 650, like that. So it is a kind of a financial help which is given by the government. Next very important term, students, is factor income earned from abroad. So factor income, we all know what factor income is. It is the income which is accrued or which is earned by the factors of production for their factor services. So what happens if a person from India is working in the USA? What will happen? He will be earning money there, right? But that money that he is earning in USA is a part of Indian income. He is an Indian person, so his income is considered as factor income earned from abroad, because whatever money he is earning there, he will bring that back to India, right? So the income which is earned by the normal residents of a country from the rest of the world is known as factor income earned from abroad. But students, the other situation also happens, the opposite also happens, right? There are some people from other country who are staying in India, who are working in India, who are earning in India, but they will take this money back to their own country. So that is referred to as factor income to abroad. So it basically means factor income paid to the normal residents of other countries for their factor services within the domestic territory. It is the income which is earned by the normal residents of other country who are working in India and who will be earning in India, but that income will be considered a part of their domestic territory. Okay, students? So these are some very basic concepts. Now, with the help of these concepts, we are going to derive some very important domestic concepts and national concepts. Domestic means something which is produced or something which is of our domestic territory, of something which is produced within the geographical boundary of India, something which is produced indigenously, right? So domestic means produced within the geographical boundary or within the economic territory of India. And national means it can include both the domestic as well as the income which is earned from the rest of the world. So let us find out the actual meaning of national. So domestic income, if we know the domestic income, plus factor income earned from abroad minus factor income paid abroad. So what happens, students? Both cases can be seen. There might be people from the rest of the world who are working in our country. Also, there are people from our country who are working in some other country. So if suppose a person from India is working in the USA and he is earning rupees 1000. So that is a part of India's income. But at the same time, students, someone from some other country is also working in India and he is also taking money from India to his own country, right? So that will be a part of their national income. So what we will have to do, we will simply have to deduct the factor income paid abroad from the factor income earned from abroad. So for example, the Indian person who is working in USA, he is earning 1000, and the American person who is working in India, he is earning rupees 800. So we are earning 1000 and they are earning 800 from us. But in reality, our actual income is 1000 minus 800, that is 200. Our net income is 200. So students, in order to derive the national income, we have to add domestic income with the net factor income from abroad. And net factor income from abroad is nothing but the difference between factor income earned from abroad minus factor income paid abroad. That means the income that we are earning from other country minus the income that other countries are earning from our country, right? So this is the concept of domestic income and national income. So just remember, how can we calculate national income from domestic income? We can calculate national income by domestic income by adding net factor income from abroad with the domestic income. And what is net factor income from abroad? It is simply the difference between factor income earned from abroad minus the factor income paid abroad. Okay, students? The next important concepts are gross and net concept. Gross means it includes everything, right? So suppose I have bought a machine. That machine is capable of producing output worth rupees 1000. So students, what will happen? That machine is giving me a value of rupees 1000. But after a certain point of time, that machine will start getting damaged. I will have to repair the machine. So for the repairment process, for the repairment purpose, I am incurring or I am spending rupees 200. So what will happen? That machine is giving me 1000, but in return I am spending rupees 200 on the repairment of the machine. So actually that machine is giving me rupees 800, because even though it is giving me 1000, I am spending 200 for its repair purpose, right? So the concept of depreciation is used here. Whenever we have any gross concept, from there if we deduct depreciation, what we get is the net. Okay, students? So the machine is giving me output worth rupees 1000, that is the GDP suppose, but that machine also requires to be repaired. For that I am spending 200. So actually that machine is giving me an output of how much? 800. That is the net. So always remember, in order to derive any net concept from gross, we have to deduct or we have to minus depreciation from the gross concept. This is gross domestic product minus depreciation will be equal to net domestic product. Similarly, students, if it is gross national product, then if we deduct depreciation, what we will get? We will get net national product. So if whether it is a domestic concept or it is a national concept, doesn't matter. In order to get the net concept from gross concept, we will always have to minus depreciation from it. So students, GDP meaning gross domestic product, NDP meaning net domestic product, GNP meaning gross national product, and NNP meaning net national product. So the first two are domestic concepts and the last two are national concepts. The first two, GDP and NDP, the first one includes depreciation and the second one does not include depreciation. Both are domestic concepts. And the third and the fourth concepts, both are national concepts. The first concept includes depreciation and the second one, it does not include depreciation. Okay students, so today we have started our class by recapitulating the circular flow of income model in a two-sector economy, and then we went on to understand some very basic concepts like depreciation, indirect taxes, subsidies, factory income earned from abroad and factory income paid abroad. From there we derived some very important concepts, domestic and national concepts, as well as gross and net concepts. So students, what is domestic income? The income which is earned within the geographical boundary of a country. And how can we derive national income from domestic? We have to add net factor income from abroad. What is net factor income from abroad? Net factor income from abroad is the difference between factor income earned from abroad and the factor income paid abroad. Another important concept is student, the gross and net concept. So gross means the overall and net means minus depreciation. So if we have any kind of gross concept, from there if we deduct depreciation we will get the net concept. Whether it is a domestic concept or it is a national concept, doesn't matter. The main idea is to deduct depreciation from gross in order to obtain net. So students, this is all about today's class. In our next class, we shall be continuing with some other important concepts, and then finally we will try to understand the various methods of calculating national income. Students, in case you feel that you have any doubt, please let me know. I'll surely help you. Okay then students, on this note, let us end today's class here. See you all in your next class. Thank you, stay safe and have a nice day.